The road to the Iraqi dinar's revaluation history, signals, and global context introduction. A defining monetary moment, the global financial community has always been sensitive to sudden disruptions, moments when a shift in valuation, policy, or strategy changes the trajectory of international economics. For nearly 2 decades, speculation about the Iraqi dinar has been one such source of debate. Some dismissed it as an impossible dream, others regarded it as a calculated long-term play, and still others saw it as outright conspiracy. Yet recent developments suggest that we may be entering a new chapter, one where long-rumored plans transition into reality. The convergence of insider reports, leaked government documents, and official statements from Baghdad's Central Bank of Iraq, CBI, has provided the strongest evidence to date that a revaluation (RV) of the dinar is no longer hypothetical. If accurate, this shift could trigger one of the most significant wealth redistributions in the modern financial era and alter the balance of economic power across the Middle East. To understand why this moment is so important, we need to retrace the dinar's journey, examine the official and unofficial signals now converging, and analyze the international motives that may have brought us here. The historical backdrop. From power to collapse pre-2003 strength of the dinar before Iraq's financial collapse following the 2003 US-led invasion, the Iraqi dinar was not merely a regional currency. It was one of the stronger units of exchange in the Middle East. At its peak, the dinar traded above $3 per unit. The valuation reflected Iraq's considerable resource base, over 140 billion barrels of proven oil reserves, significant untapped mineral deposits, agricultural capacity, and its central geographic location bridging Asia, the Middle East, and Europe. The downfall of the currency, the fall of Saddam Hussein's regime in 2003, created a perfect storm of instability. International sanctions, war-related destruction, and a dismantling of state institutions pushed Iraq's financial system into disarray. The currency, which once had purchasing power comparable to the strongest in the region, plummeted to a fraction of a US cent. From over $3 per dinar, it collapsed to around 1,300–1,400 dinars per US dollar. Post-invasion reconstruction and reset in the aftermath, the Central Bank of Iraq, under heavy international supervision, issued new currency notes and worked to stabilize a collapsing economy. Though the new dinar notes prevented further freefall and established a functional payment system, the exchange rate remained extremely low. From that point onward, speculation grew around one central question: would Iraq eventually restore its currency to reflect its true economic power? The emergence of the revaluation narrative, why the dinar became a speculator's dream, the core of the revaluation thesis was straightforward. Iraq possessed immense natural wealth, yet its currency was priced as if the nation were bankrupt. Supporters of the RV theory argued that as Iraq regained political stability, rebuilt its institutions, and improved relations with international partners, a recalibration of the dinar would eventually follow. This belief attracted not just small-scale speculators, but also hedge funds, private equity interests, and even government entities who quietly accumulated dinar holdings. For many, the investment was a low-risk, high-reward bet, purchasing dinars at a fraction of a cent in hopes that one day they would revalue closer to historical levels. Persistent skepticism on the other side, critics labeled the dinar speculation a scam. They argued that no government would permit such a dramatic overnight wealth shift, and that revaluations of the scale often discussed in forums and investment circles were impossible. Financial analysts dismissed it as a lottery ticket rather than a rational bet. Yet despite ridicule, the narrative never disappeared. Signals of change, recent developments. U.S. Treasury Bulletin, May 2025. A crucial turning point came when a classified U.S. Treasury bulletin circulated in May 2025 referenced foreign currency liquidity events involving recognized sovereign states. While intentionally vague, this phrase carried weight among policy watchers. It is rare for the Treasury to use such language unless referring to large-scale currency adjustments or preparations for major valuation changes. The timing of this bulletin coincided with statements from the CBI confirming that a comprehensive, monetary restructuring plan had been finalized, with Iraq aligning its policies to international compliance standards. This alignment indicated readiness not just for domestic reform, but for integration into the broader global settlement infrastructure. Freedom of Information Act, FOIA disclosure adding to the intrigue. A Freedom of Information Act request forced the release of a partially redacted Treasury document explicitly referencing Iraq's sovereign monetary reserve readjustment timeline. While details were hidden, the phrase itself strongly implies scheduled actions regarding reserve management, often a precursor to currency reform. Analysts concluded that this bureaucratic language is effectively code for a structured revaluation process. Banking system tests, reports from insiders, suggested that trial exchanges and system tests had been conducted in U.S. banking hubs such as Texas, Nevada, and Florida. Allegedly, these were not paper simulations, but live test redemptions at significantly higher rates than the current market exchange. Compliance teams, auditors, and IT staff reportedly monitored the transactions to confirm system readiness. If true, this indicates not only intent but operational capacity. Why now? Strategic motivations for a revaluation. U.S. economic interests. The United States reportedly holds large amounts of dinar through oil credit agreements with Iraq. A revaluation would multiply the value of these holdings, providing the U.S. Treasury with a significant financial boost. This would also reinforce America's leverage in ongoing global trade negotiations and fiscal balancing. Regional stabilization. A stronger Iraqi economy benefits Washington geopolitically. With Iraq sitting at the crossroads of the Middle East, economic stability reduces the risk of unrest, strengthens governance, and helps counter rival regional influences. Global currency realignment. The revaluation may also tie into broader financial trends. As economic blocs like BRICS seek alternatives to the U.S. dollar for trade settlement, a stronger, internationally viable Iraqi dinar would act as a counterweight, maintaining Western influence in global finance. Supporting a partner nation's currency reform ensures that at least part of new trade flows remain linked to U.S. and allied systems. Building toward revaluation. Iraq's domestic progress. Banking modernization. Over the past decade, Iraq has invested in modernizing its banking systems. Compliance upgrades, anti-money laundering protocols, and integration with international settlement platforms have brought it closer to meeting IMF and BIS standards. IMF guidance and monitoring. The International Monetary Fund has been deeply involved in advising Iraq on fiscal reforms, debt reduction, and anti-corruption initiatives. Each reform step has inched Iraq toward a position where a stronger currency could be sustained. Oil for dollar agreements and reserve strategic agreements with the U.S. and other countries have allowed Iraq to stabilize its finances and accumulate foreign currency reserves. These reserves are essential for supporting a stronger exchange rate. Legislative preparations. Iraq's parliament has passed multiple measures laying groundwork for currency reform, including discussions of redenomination, new note issuance, and regulatory structures to support international reintegration. Implications of a revaluation. For Iraq, a dinar revaluation would instantly increase Iraq's purchasing power abroad, strengthen its ability to attract foreign investment, and improve its capacity to service debt. Domestically, it would improve the living standards of citizens by stabilizing import costs and building confidence in the national financial system. For investors and holders, for those who have held dinar for years, the implications are potentially life-changing. Even a modest adjustment, for example, a rate of $0.10 per dinar, would multiply small holdings dramatically. At parity with the U.S. dollar, the effect would be transformative. For global finance, much like Kuwait's post-war dinar restoration in the early 1990s, an Iraqi RV would serve as a case study in how currencies suppressed by conflict and instability can recover under the right conditions. It could also spark ripple effects across the Middle East and beyond, influencing other undervalued or strategically controlled currencies. Staying grounded. Risks and reality. While optimism is high, it is vital to remember that revaluations of this scale involve risks. Implementation requires perfect coordination between Iraq, international banking systems, and compliance mechanisms. There is also the risk of misinformation, as the dinar community has long been plagued by exaggerated claims, scam exchange groups, and opportunistic actors. Key reminders for holders: never pay upfront fees for special exchange opportunities. Only redeem through licensed banks with foreign currency desks. Follow official updates from the CBI, IMF, and U.S. Treasury. Prepare documentation, government-issued ID, proof of purchase, and records for tax purposes. For years, the Iraqi dinar revaluation was little more than a rumor sustained by online forums and speculative chatter. Today, however, we see unprecedented alignment. Treasury signals, CBI confirmations, documented reserve adjustments, and banking system tests. While full public rollout has not yet been declared, the evidence suggests that the process is not just possible, it is already in motion. This is why the current moment matters. It may represent not only a reset for Iraq, but also a turning point in global currency dynamics. Whether you are an investor, a casual holder, or simply an observer, the coming weeks and months could mark the beginning of one of the most consequential monetary events of the 21st century. Stay cautious, stay informed, and most importantly, be prepared. The speculation phase appears to be closing, and the execution phase may finally be upon us. The Iraqi dinar revaluation, scenarios, implications, and strategic preparation introduction. From possibility to practicality with the signals from the U.S. Treasury, the Central Bank of Iraq, and international institutions suggesting that a revaluation, RV, is closer than ever, the conversation must now shift from if to when and how. For years, the debate around the Iraqi dinar centered on credibility, whether a suppressed currency could ever regain its former glory. Today, with operational tests reportedly complete and official references emerging, the task for holders is not just to celebrate, but to plan. The implications of a revaluation go far beyond individual investors. They touch geopolitics, global currency realignment, U.S. fiscal strategy, and Iraq's own economic destiny. To prepare effectively, we must explore three key dimensions: scenarios for valuation, ripple effects across the world, and practical steps for holders. Possible valuation scenarios. Baseline calculations. The future rate of the Iraqi dinar is the subject of endless speculation. While no exact figure can be guaranteed, analysts typically outline a range of possible outcomes, each with different levels of impact. One low-level adjustment, 0.050.10 USD per dinar. This would already represent a massive leap from the current rate, $0.00076 USD. A $0.10 rate would mean that 1 million dinars, currently worth less than $800, would suddenly equal $100,000. This is considered the minimum, realistic scenario, based on Iraq's oil wealth and reserve capacity. 2 mid-level adjustment, 0.50, 1.00 USD per dinar. At parity with the dollar, 1 million dinars would equal $1 million. This scenario mirrors Iraq's pre-war valuation and is often cited as the most historically justified. Achieving this level would place Iraq among the stronger Middle Eastern economies almost overnight. 3 high-level adjustment, above 1 USD per dinar. While some speculators suggest $2.03 per dinar, such scenarios are less likely due to inflationary concerns and global balancing requirements. However, if Iraq leverages both its oil and gold reserves while locking in favorable international agreements, a rate above parity cannot be fully dismissed. The Kuwaiti precedent, one reason many see the dinar revaluation as plausible, is the case of Kuwait. After the Gulf War, the Kuwaiti dinar plummeted in value, but was restored to pre-war levels once stability returned. This precedent demonstrates that currencies suppressed by conflict can rebound dramatically if resources and governance support the move. Global implications of a revaluation. Iraq's economic transformation. Debt servicing. A stronger dinar would allow Iraq to more easily pay foreign debts, enhancing credibility in international markets. Investment surge. Global corporations, particularly in energy and infrastructure, would rush to invest in a country with stronger financial standing. Public confidence. Ordinary Iraqi citizens would see improved purchasing power, fueling domestic stability and reducing unrest. Regional effects. Middle Eastern stability. A wealthier Iraq could act as a counterbalance to both Iran and Turkey, altering the region's balance of power. Trade expansion. Neighboring countries would benefit as Iraq's imports increase, and its financial strength boosts cross-border trade. Global currency realignment. Challenge to de-dollarization. Nations pushing alternatives to the US dollar, such as the BRICS bloc, may face new competition from a US-aligned currency re-emerging with strength. Boost to Western financial systems. By supporting the dinar, the US and its allies can maintain leverage in regions where financial influence is increasingly contested. US Strategic Positioning Treasury windfall. The US reportedly holds billions in dinar through oil credit agreements. A revaluation would multiply those holdings overnight. Policy leverage. A prosperous Iraq helps Washington anchor Middle Eastern strategy, ensuring stability where energy and geopolitics collide. Investor considerations and preparation. Step 1. Verify authentic holdings. Not all dinars are equal. Counterfeit notes have circulated widely, and many holders purchased currency through unregulated dealers. Investors should confirm their dinars are authentic. Security features, licensed dealer receipts. Keep documentation such as invoices and certificates of authenticity. Step 2. Identify legitimate redemption channels. Rumors abound regarding special groups or private exchanges. In reality, exchanges will almost certainly occur through major banks with foreign currency desks. Potentially involved banks include Wells Fargo, Chase, Fifth Third Bank. Internationally, HSBC and Standard Chartered have been mentioned in speculation circles. Step 3. Prepare documentation at the point of exchange. Expect to present government-issued photo ID, proof of purchase receipts or certificates, tax documents, especially for larger holdings, as governments will monitor for compliance. Step 4. Understand tax implications. Revaluation proceeds will be subject to capital gains or income tax depending on jurisdiction. Holders should consult financial advisors early to ensure compliance and effective tax planning. Step 5. Develop a post-exchange strategy. Sudden wealth has historically been mismanaged by those unprepared. Considerations include diversification. Avoid keeping all value in one form. Spread across real estate, equities, commodities, and secure savings vehicles. Wealth preservation. Inflation, mismanagement, and poor investment decisions can erode sudden gains. Generational planning. Estate planning, trusts, and legal structures can help manage wealth responsibly. Risks and uncertainties. Over-exaggeration. The dinar community has long been plagued by exaggerated promises. While the current convergence of signals is unprecedented, investors must remain cautious and avoid get-rich-quick assumptions. Market volatility. Even if revaluation occurs, the market could see short-term instability. Speculative bubbles, rapid sell-offs, or liquidity crunches could create chaos in the first weeks. Political shifts. Iraq's political environment remains fragile. Internal divisions or regional conflicts could delay or derail implementation, even if technical systems are ready. Scams and exploitation. Fraudulent exchange offers, fake VIP groups, and pay-to-play schemes will likely multiply as speculation grows. Holders must remain vigilant. Long-term wealth strategies. For holders' conservative approach, exchange only part of your holdings initially. Secure stable, income-generating investments. Maintain emergency reserves in multiple currencies. Growth-oriented approach. Allocate a portion of revaluation proceeds into high-growth sectors, technology, renewable energy, or real estate. Partner with financial advisors who specialize in sudden wealth management. Legacy and impact. Establish charitable foundations or philanthropic ventures to ensure wealth creates positive societal impact. Consider generational planning so the benefits extend beyond immediate family. Broader lessons for currency investors. The Dinar Saga offers valuable insights for anyone considering investment in undervalued or distressed currencies. Patience is key. Many holders have waited over 15 years. Such plays are not for short-term speculation. Political support matters. No currency moves in isolation. Global powers must align for revaluation to succeed. Infrastructure first. Without banking modernization and compliance, even the wealthiest nation cannot sustain a strong currency. Conclusion. The final stretch. The Iraqi dinar revaluation, long debated and often ridiculed, now appears closer than at any point since 2003. The convergence of U.S. Treasury references, CBI confirmations, leaked documentation, and system testing suggests a coordinated plan already in motion. For Iraq, this represents a chance to finally unlock its vast economic potential and reclaim a position of strength in the global community. For holders, it may mark the fulfillment of years of patience, risk, and preparation. For the world, it could signal the beginning of a broader realignment in how currencies reflect wealth and power in the 21st century. But preparation is everything. Those who remain informed, cautious, and strategic will be best positioned to benefit when speculation gives way to reality. Whether the dinar rises modestly or dramatically, the revaluation is not just about numbers on a screen. It is about Iraq's rebirth, global financial shifts, and the reshaping of personal and collective destinies. Stay vigilant. Stay prepared. The next chapter is about to be written. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.